Thank you very much for joining us once again. So this is an engagement session with the Joint Revenue Board and the Presidential Fiscal Policy and Tax Reform Committee. We also have executive chairpersons of some of the internal revenue services from the states joining us. So we thank all our participants as well as those who have joined us to share their knowledge, their experiences, and to answer questions. We also have one of the members of the committee joining us, Mr. Albert Folorenshaw. The purpose of this session is to help participants to better understand the compliance requirements under the new tax reform law. We consider this stakeholder group of payroll managers, accountants, CFOs, people who have one role or the other to play in terms of the remuneration of employees, payroll, contributions, taxes, and compliance for them to be better informed and also for them to be able to share some feedback with us so that together we can implement this reform in a way that benefits everyone. So this is a special engagement with this critical stakeholder group. Based on the level of interest, which we had over 13,000 people register for this. We were not expecting that level of interest, so we will most likely do a rerun or share the recording, like I said before. Well, this is not to ask anyone attending these events to go and promote the tax reform. We always like to make that clarification. This is to enable you better understand, and it's entirely left to you if you want to share your knowledge with other people, but would encourage you to at least, educate your staff. If you have the role of, HR person, the accountant, I think it just helps when your staff know what's happening to them and not trying to guess or second guess why their pay, has increased or where their tax has reduced. And for the high net worth individuals, wondering why their taxes have increased. So the outline for the session is we're going to give a very brief general overview and speak to the key reforms objectives. And then we'll look at the implementation and transition arrangements for what you have been doing before and what you have to do differently and the key changes that would impact on employee compensation, particularly from a tax point of view, and then the key administrative and statutory compliance requirements. So generally, this reform became necessary because we had a tax system that was broken. Broken in the sense that it was fragmented with all manners of multiple taxation, very high tax burden manners. And the tax system became regressive. So in order to promote fairness, to ensure that there's harmonization, to drive efficiency and ease of doing business, and to promote transparency of what government collects and how that money is spent, these reforms became necessary. We have made a lot of progress so far, but we're not there as of yet. We've seen progress around harmonization of even subnational taxes, where as of today, at least 11 states have already enacted the new law. So GRB might want to make, some comments about this later on. And also a lot in terms of modernization, which I'm sure people on this call can even attest to, trying to use technology better, but it's not done yet, which means we still have key objectives of these reforms that are yet to be accomplished. Some of it also includes harmonization. As much as we have made some progress, there's still a lot to do. I just returned from an engagement with small businesses, even in the FCT, where they said that they're still having to deal with issues of multiple taxation at the local council level. But there's progress. So the key tax laws forming the framework for this conversation today will be the Nigeria Tax Act. As we know, this is the new law that consolidates many of the previous old tax laws, such as CETA, PITA, CGT, and so on and so forth. The second legal framework is the Nigeria Tax Administration Act, which provides essentially provisions on administration of taxes, including registration, assessment, filing returns, and enforcement, which is a major component of our discussion today. Then we'll be referencing, notices, guidelines, and regulations. Some of these have been issued by some of the tax authorities under the current laws. Some of the guidelines are still the old ones. You may have observed that in the new tax laws, there are savings and transition provisions. So what those transition and savings provisions actually cover is to say, if there's a provision in this law and there are guidelines or regulations that have been issued previously under the old law, to the extent that those regulations are not inconsistent, they will continue to apply until new regulations are issued. So this is to the extent to which those guidelines remain relevant for this conversation. So broadly speaking, the tax reform focus on a number of key objectives, and it has some features that will be of use to participants on this call. The first one is fiscal equity. So these new tax laws are trying to address, long-standing issues with our tax system, including fiscal drag, where we've succeeded in pulling low-income earners to the highest top tax band, like marginal rates. So for example, you can easily find someone who is earning 500,000 naira a month already paying the top marginal rates with someone who earns 1 billion naira a year. So clearly that was not the original intention of the law, and it needed some fixing. There are also some issues around fiscal federalism, where, for example, states, are entitled to stamp duties, but you have electronic money transfer, which is really a stamp duty, and is being shared with federal government and local governments, which is inconsistent with the Constitution. We also have instances where state bonds are not tax exempt, but federal government bond is tax exempt. So we needed to correct those issues. There's also a lot of focus on economic growth. This is what can we do to lower the tax burden on businesses, exempt small businesses, and ensure that we can have growth without inflation. There's also a lot designed in the new tax law to encourage formalization of businesses. The system we had previously was discouraging businesses from formalizing, because if you run your business as an enterprise and you make a lot of money, your effective tax rate, income tax rate is less than 20%. But if it's a company, you suddenly pay over sometimes 40% effective tax rate. And so the question will be, why should anybody be in a hurry to formalize their business as a company if the tax system was discouraging? In fact, this was the opposite of what you find in almost every other country in the world. So most countries around the world will have a lower corporate tax rate than the top marginal rate for individuals, so that people are incentivized to formalize. Competitiveness is our focus on how to make Nigeria able to compete within Nigeria. So which means doing business in Nigeria, I should not buy something, import it from abroad, and then it lands here at a cheaper amount. Why some of those problems are to do with issues like infrastructure. There's also the contribution of tax to that problem, which we're trying to address under this reform. There's also the issue around digital economy. For example, Nigeria was not able to attract a lot of remote work for our young people in particular, because if a foreign company hires someone to work for them remotely in Nigeria, that foreign company becomes liable to tax in most cases. And that discouraged them from trying to hire Nigerians to work for them. Under the new tax law, that problem has been removed. So Nigeria can now compete with the likes of the Philippines, South Africa, Kenya. Imagine we can get 2 million of our young people to work remotely. Even if they were earning just $1,000, $2,000 a month, that's a lot of, inflow of effects for the economy and income for those individuals and their households. I already mentioned tax harmonization. This is one big area of focus where we are trying to reduce the number of taxes from over 60 officially to a single digit across all levels of government combined, and also to address the issue of non-state actors, illegal taxes, and legal taxes collected illegally. Part of this harmonization also covers the integration of tax identity. Some of you may have noticed that many of us have new tax IDs, because that's the harmonized one, and it's currently being integrated with the tax system. Modernization is how we use technology to make life easy for everyone, both the taxman and the taxpayer, and including things like risk-based audits. We shouldn't be going back to the same taxpayers already in the tax net and audit them every single time over and over again, when there are those who are not even in the tax net or are evading taxes. So with the use of technology, you will not be second guessing or just, be random about who you audit. The system will flag who you need to audit because of the risk profile. So this will also encourage taxpayers to comply, because it means the more compliant you are, the less you see visit from the tax authority. But if you are non-compliant, you see a lot of visits, and until you become compliant, you have to deal with that. Sustainable revenue is a secondary objective. It's not the primary objective of the reform. We think that if we reform the system and curb tax evasion, revenue will go up. If you remove distortion, including those created by tax incentives and waivers that are not available to everyone or not well designed, you will make more revenue. And most importantly, when you stimulate economic growth and development, revenue will come. So as a consequence of the reform designed to stimulate economic activities, protect vulnerable taxpayers, create equity and level playing field, we're confident that revenue will follow. Some people have asked, how is it that we said we're not introducing new taxes, we're not increasing tax rates, and yet we said tax to GDP ratio would increase? This is the exact explanation I've just provided. So in terms of the implementation, what do you need to note? Number one is the new tax laws are not meant to be retroactive, which means the new law will not apply to transactions and events that happen before the commencement of the new tax law. To be honest, I think many people will not mind, because the new tax law is providing a lot of reliefs and benefits, but we have to be consistent with what is right in principle, which is that you don't enact a new law and apply it retroactively. So in terms of transition issues, if you are doing filing in 2026 for income that you earn in 2025, even though you are filing it in 2026, the old laws would apply. So for many of you now, you are filing, different returns this January as employers. By the end of March, individuals will be filing their own personal income tax returns. For those returns, you'll be using the old tax rules. So the new tax law would apply to the income you earn from 1st of January 2026. It is important for us as stakeholders to communicate with clarity to our stakeholders. Don't just pay your staff without saying anything, right? Even though for our estimation is 98% of workers in the private and public sector will see a drop or total removal of their PAYE tax, even though that is good news, you still need to communicate to them. Don't let them start guessing what has happened. I think it's just good. In fact, it shows courtesy to those employees when you communicate to them. So what are some of the major changes and compliance requirements? You find that many of the points I want to discuss now may not even be new, right? But it's just that you need to be reminded, and those that are new, you need to pay attention to them. The first one is charge to tax, and some of the issues I have on this slide and the next two address some of the questions that you submitted during the process of registration for this program. Nigeria on their worldwide income, including salaries, wages, allowances, and I think we are familiar with this provision. Tax ID is being harmonized nationwide and is required for you business purposes or for earning income. For certainly, if you're an employee and you earn salary on a monthly basis, your bank account needs to have a tax ID. Tax clearance certificates has now been limited to a few transactions. We used to have TCC being required, now just a few items like certificate of occupancy, approval of building plans. You're getting a contract for government agencies. You want to, buy firearms, or you want to do import and export. So a lot of the other things that we used to need TCC for have been removed. For example, you no longer need tax clearance certificates for FX transaction if you do want to buy FX for anything. Then fiscal drag, I already explained this. The old tax law, because of inflation, old tax rate and band was introduced in 2011. And we did almost nothing until this reform. So you can imagine about 15 years, inflation has eroded the value of Naira, and those who were high income earners and pay the top marginal rate, suddenly that amount that was high is now. So that's what we call fiscal drag that we needed to address. And that also links to the next one, where the tax is now more progressive in terms of the incidence of tax ultimately. Essentially, if you're lowest income earners, you don't pay any personal income tax. If you're middle income earner, you pay less. If you're high income earner, you pay more. Minimum wage is specifically tax exempt. Some people have done analysis to say 70,000 times 12 is 840. They only exempt 800,000 from tax. So therefore, even minimum wage earners will still pay tax on 40,000. This is wrong analysis. It's wrong on number one, the 800,000 naira is not your gross income, is your taxable income paid with taxable income. So you take your expenses or deductibles, taxable income. Number two reason why it's wrong is that there's a specific provision in the new tax law that exempts national minimum wage, which is currently 70,000 naira per month. If that amount is increased tomorrow to 250,000, that 250,000 becomes automatically tax exempt. So minimum wage earners will not pay personal income tax. These reforms are encouraging us to formalize, and the rate for businesses and companies has reduced. What that does is it will then encourage people to formalize their businesses. Just imagine you are running a small business. Your annual turnover is not up to 100 million. You know you can register a company and pay CIT at 0%. Of course, you want to register. And the Corporate Affairs Commission, informed us that they are even getting up to about 5,000 applications every single day for people who want to register their company. So you see, this is reform driving the right behavior, because when you formalize, your governance gets better, you are more, diligent in keeping records, you prepare accounts, and these little things make your business to be investable. You are ready for access to finance. You can scale. You can get partners and investors, including even foreign investors. So it's a very good development. So this is one of the reasons why the top marginal rate for individuals has to go up. Another thing is simplicity. And I've seen even a lot of professionals complain about it. They say, oh, why did they remove consolidated relief allowance? They should have left it, personal relief. And I think it's people not just fully understanding how the reforms come together. If there's a law that says you're entitled to 20% of your income as tax-free, and you pay tax on the balance of 80%, let's say your annual income is 1 million naira. You get 20% off, that's 200,000. You pay tax on the balance of 80%, which is 800,000. If your tax rate is 15% on 800,000, you pay 120,000 naira. That's the tax you pay, 120,000 naira. If you enjoy relief, you're paying 120,000 naira. What if the law is amended and it says you're not entitled to any relief, but you pay 10%? So you still earn 1 million naira, no relief. You calculate 10%, and it's 100,000 naira. Now, 100,000 naira is lower than 120,000 naira. So essentially, what we're trying to do with the new tax reform law is to remove complexity. You have to think about personal relief, consolidated relief allowances, and we want, because there's a requirement under the new law as it was under the old, but compliance was poor. Everyone has to file returns, including employees. So if it's too complicated, majority of our citizens won't be able to do it, and they don't have the money to hire professionals to help them do it. So we were trying to make sure that this tax reform is as simple enough for the average Nigerian to be able to do their own tax calculation by themselves. In other words, if you get tax relief of 20%, it's the same thing as just grossing up the tax rate or discounting it without the 20%. So the rates and the relief allowances don't make any your effective tax rate and how much tax are you paying. So this new tax law has been designed, even though without personal relief and consolidated relief allowances, to deliver exemption for lowest income earners, lower taxes for middle class, and progressively higher taxes for high income earners. So I think this is an important point to pay attention to. So even for the top earners who have marginally higher taxes to pay for personal income tax, what you find is that these people are mostly top executives or business owners. If you fall into this category, what that means is the reform would increase the cash flow and profit of your business, lower tax rates, tax on services that you did not have before. So suddenly, as an executive, you are paying 1 million naira more tax, but the company you run is making 20 million naira more profits. So easily, people at that level can get more bonus from the performance of the organization. If they're the owners of the business, they pay 1 million more, they get 20 million more. They are far better off by 19 million naira. So essentially, the point is, even the high income earners will be better off under this reform than under the old laws. So we have non-residents. The rules for residency has also been modified in the new law. It's more flexible now. So if you are working in Nigeria, you are earning income before you become tax resident and have to pay tax in Nigeria, the rules are more relaxed because we want to be able to attract shared services center, headquarters location into Nigeria. And if we are too strict, then the rules will not work in our favor. So all those provisions of, if the employment income is borne by a permanent resident and this and that have been removed. So very, very user and tax friendly. Remittances and gifts are not taxable, so Nigerians in the diaspora don't need to worry. But if you're in the diaspora and you are doing, you have a side hustle in Nigeria, you pay tax like anyone else. You have a property, you earn rent, you pay tax like anyone else. Otherwise, your income that you earn abroad, if you are resident outside Nigeria, is not liable to tax in Nigeria. Pension and retirement are not liable to tax under the Pension Reform Act. So we've seen some people say, oh, they've introduced new tax law to be taxing pension. No, there's what we call the charging section. It says pension is liable to tax, blanket exemption, because you could have expatriates who work in Nigeria, they earn foreign currency, they move their money abroad to do their pension contribution. That money is not available for our economy. So why do we want to grant tax exemption for those kind of pension? So that's why the charging provision says pension is taxable, and then went ahead to make a specific exclusion to say pension, gratuity, retirement benefit granted under the Pension Reform Act are exempt. So just make note of that. Pension, retirement benefits are not taxable once they are made under the Pension Reform Act. Compensation for loss of employment, the amount that is exempt from tax has been increased to 50 million. If somebody is laid off and they receive more than 50 million, they pay tax only on the excess of 50 million. 50 million remains tax exempt for everyone. So it's not like if they pay you 80 million, you now suddenly pay tax on the entire 80 million. No, you still take out 50 million and pay tax on the balance of 30 million in that example. Capital gains tax has been integrated to income tax, which means if an individual earns chargeable gain, they have to include it in their own income. If they are below exemption threshold, they don't pay tax on that CGT. If their effective tax rate is 5%, they pay 5%. If they are a high net worth individual, they can pay close to 25%. So rather than 10% that we just charged everybody before, and many of us, we know that when you have a flat tax rate, it's regressive. We now have our CGT being progressive. In addition to that, in the capital market, if you invest and you have sales proceed from selling your shares up to 150 million naira and gains not exceeding 10 million naira in a year, you will not pay tax. So you are tax exempt. And this exemption covers over 99% of investors in the capital market. Should you sell more than 150 million or make gains of more than 10 million, all that you need to do not to pay tax is just to reinvest. So you sell the shares of XYZ Limited or PLC, and you buy ABC PLC, and you're good. So, and this applies to everyone. We've seen instances on social media where they said, oh, all taxes will now be paid to NRS. NRS will collect taxes for state and local government. That is not true. Under this new tax law, the subnational retain their powers and jurisdiction over individual income taxes, stamp duty, and a few other taxes payable by individuals. And all the state internal revenue services are collaborating to exchange data, information, capacity building, which will help both the tax authority and the taxpayers. So this thing where you live and work in Lagos, you pay your tax, you have your TCC, then you are from, let's say you are from Ekiti State, You go to your state, they say you pay another tax before you can buy land. It's actually not ideal. It's against the Constitution, but we did not have the mechanism to address that problem until now. So the system that is being built now will allow that harmonization to happen seamlessly. Partnerships, whether they are limited or not, because you'll be aware that under CAMA 2021 or 2020, you can have a limited liability partnership. Partnership can now be incorporated pretty much. So under this new tax law, whether it's incorporated or not, your taxes are payable to the state because we don't want to deprive states of their revenue. They've been collecting taxes on partners in a partnership for forever, so they should not be deprived of that revenue. I already spoke to remote work opportunities for our people. Virtual assets. Virtual asset like crypto, stablecoin is not really supposed to be making gains, but stablecoins and the rest of them are liable to tax. They've always been liable to tax, so it's not new. What is new now is you can take your capital losses as a deduction. That provision wasn't available before. So it means that this new tax law is even more friendly to people who play in the virtual asset space. Freelancers, content creators, professionals doing their stuff freely, they are not employed by one person, they just work for whoever, is able to meet their terms. Those kind of businesses, of course, they will pay tax on their income if they are above the exemption threshold, but they now have the opportunity also to deduct expenses that are wholly and exclusively incurred. The other conditions we had before, which says it has to be reasonable, it has to be, when you say my expense has to be reasonable, if I'm a freelancer, if I'm a content creator and I want to look good to do my videos, somebody could have said to you that, why are you dressing to just do video? This amount you spend on your makeup is not reasonable, and they will disallow it. Under the new law, that condition is no longer there. It's not for the taxman to tell you what is reasonable and what is not reasonable. All that they need to ask you is, this cost was incurred just for the purpose of business, exclusively and wholly. If the answer is yes, you are free to make a tax deduction for it. I already told you about the residency rule. Unilateral tax credit is, if for any reason you earn income from abroad, and that income has suffered tax abroad and is also liable to tax in Nigeria, before you have to hope and pray that there's a double tax treaty between Nigeria and that other country. Under the new tax law, we have introduced unilateral tax credit, which means we don't even need to have double tax avoidance treaty with any country for you to enjoy these benefits. Any tax you paid abroad becomes a tax credit in Nigeria up to the amount of tax you need to pay in Nigeria, which means you never have to pay double taxation. So these are some of the key changes in the new tax law that we've gone through. What I want to speak to you about now is some of the policy thinking behind the tax reform. We have seen a lot of people, particularly on social media again, where they'll say, oh, they said they're not taxing poverty, but they're taxing poor people. Many people are so comfortable, they don't even know that majority of Nigerians can boast of 200,000 naira a month. So we get so comfortable. I saw one video. No, was it a video or just an image? Was going viral on WhatsApp group. And the person had gone to a restaurant, spent over 200,000 naira and was complaining about VAT. I said, do this person, do they even understand that 200,000 naira is what some people struggle to save in a whole year? He just had a meal, maybe with one or two friends, and that's 200K, Anyway, in designing the reform and trying to figure out who needs to be exempt, who needs to pay less tax, who needs to pay more tax, we use a lot of data points. I know that many Nigerians, if the data does not favor them, they will try and discredit it, but you can't shy away from data. So which data did we use? We had to synthesize, which means we took so many data points and we tried to aggregate and find, meeting points, including the World Bank poverty threshold. Some people said, oh, if you earn $2.15, they've increased it to $3. A day you are poor, and they'll go and take that amount and convert it using 1,400, 1,500. Not understanding that World Bank poverty threshold is purchasing power parity, is not market exchange rates. This is a very fundamental understanding that most people don't have. So when you take that $2.15 before June 2025, when it was increased to around $3, if you convert it at the exchange rate of the market rates, you have committed a fundamental error. It's to be converted using purchasing power parity. The purchasing power parity conversion for Nigeria, Naira to USD, as of 2025, last year, is about 210 Naira. In other words, what it means is that if you earn 210 Naira in Nigeria, you can buy a basket of basic goods, right, that $1 will buy in the US. That's exactly what it means. And you can test this out on your own. You don't even need to argue with anyone. Just pick, some basic items, find the amount in Naira, and then just Google how much they sell it in the US and compare. So it's 210. So that's what you need to use. But that was not the only data point we use. We also use General Household Survey, Nigeria Labor Force Survey, Nigeria Multidimensional Poverty Index, Consumer Expectation Survey, and we even use some private sector independent reports, like Piggyverse. I think we also have one from, I think it's Money Points. So we also use private sector. In aggregates, it gave us this income distribution for Nigeria. Okay. This is the income distribution for Nigeria on the average. On the average, about 40% of workers, private and public sector combined, earn below 70,000 Naira a month. I know it's hard for people in middle class in Lagos and Abuja and Kano and Port Harcourt to understand what we're saying, because this is the amount they spend for lunch, in just one day. The reality, unfortunately, is that a very large percentage of our people cannot boast of 70,000 Naira a month, even with the minimum wage. Many of them are not any minimum wage, because as you may be aware, the minimum wage law exempts a lot of people. So if you work in the informal sector, your number of staff I think is less than maybe 5 or 10 or 15, I can't remember. You're exempted from applying minimum wage. If you work in certain sectors where things are seasonal, like farming, you do an agri business and you hire 1,000 people, you don't need to apply minimum wage. So these people are just struggling, any even less than minimum wage. So they are mostly junior workers, artisanal staff, informal traders, and subsistence farmers. If you move above that, from 70,000 to 250,000, you have workers who are mostly like teachers, retail workers in supermarkets, attendants, even many attendants at fuel station, they are not even in that level 2, they are in level 1, junior civil servant, this is what they earn. Then if you move a bit up, that is upper middle, they earn between 250,000 to 2 million. This is where you find middle level professionals, they work for top consulting firms, they work for multinationals, big organizations, banks, this is the kind of money they earn, and some small business owners and senior civil servants. The interesting data is that anybody that is earning 2 million Naira a month or more is in the top 2% of all workers in Nigeria, private and public sector combined. So I know there are people who are fighting this data, and you don't need to fight. It's just data. It's what it is. If you earn 2 million or more per month, you are in the top 2% earners in Nigeria. So these are mostly senior executives, they are business owners, they are top influencers and content creators, heads of government agency. Actually, head of government agencies don't get up to 2 million naira a month. Most of them get less than that. Only a few agencies, get more than that. So this is data that will help you put things in proper perspective, because it's very easy to go online and say they should have exempted 5 million naira per annum from tax. What people also don't pay attention to is that there's a political economy of reform. What that means is even these exemptions that we have done in the new tax law, it's a lot for many states to accept, because a couple of states said to us that we have exempted more than 90% of their IGR, because it's more like a civil servant state. Almost everybody that is earning salary there don't even earn up to the amount we're trying to exempt. So they're like, where would they find IGR from? So, and these conversations were not very easy. If you want to be politically correct, you say, hey, what are they doing with the money? Are they not getting FAC? But the reality is nobody wants to lose the source of their revenue. We have to find a way to convince them to say there are people who are not paying, who are high income earners. Also the point around fact that your revenue that you're sharing from federation accounts is better now. No state will be bankrupt. You'll still be able to pay civil servants and do some other stuff. Those conversations require balancing. So that was how we arrive at what we eventually arrive at, which on one hand, just to repeat, actually exempts the lowest earners, right? The bottom 40% of all workers in Nigeria will not pay a dime from this January. And then the lower middle class, upper middle class will pay less. And then the top 2% will pay more. So this is how the table looks like. If you want to do mapping, I need to warn you, this mapping is just academic, because the band and the rates you see in the tax law is not what plays out in your pockets. So when you get your alert for your net pay, it's not going to reflect these rates. It will reflect a blend of these rates applicable to you and the deductions you are entitled to and the allowances that you have been able to deduct. So many things go into calculating personal income tax. One of the biggest source of misinformation was that a lot of content creators, many of them that have never even filed their personal returns ever, suddenly were teaching people what taxes they will pay. And many of them will just go to the tax table and say, if you earn 5 million, they will tax you at 18%. If you earn this, they will ask you because they don't understand it. And we even decided that we were going to train content creators when we see a lot of misinformation was coming from them, which we believe was done out of ignorance. It was very well attended. We had over 1,500 apply. But there were a couple of them who wanted to play to the gallery, and they went on with, oh, they want to bribe us. They want to ask us to do promotion for them on the back of our credibility. I just said, God Almighty, who on earth who thinks well will decline an opportunity to learn? Like, what do you have to lose if they say come and learn? Worst case scenario, you go and say it was rubbish. At least you would have known one thing that is rubbish, so you don't do it. Anyway, so one of the major sources of problem of misinformation has been coming from people who do not understand how taxation works. Taxation is a technical area. It's tough. That's why you have the likes of Albert Einstein, one of the, smartest people in the history of the world, said the hardest thing is income tax. You can imagine he wasn't joking. It's because it's complex. So anyway, even if you want to do that very academic exercise to say, oh, they said before, the tax rate was 7%, 11%, they just jumped from 0 to 15 under the new law. Why are they jumping to 15? Why can't they make it 5%? I said, okay, let's even try and compare. If you earn 240,000 naira per annum, taxable income, under the old law, you are paying 7%. Okay, under the new law is 0%. If you earn 360,000 naira taxable income a year, under the old law is 11%. Under the old one, under the new one, 0. 800,000 is 15%, is 0. 3 million is 21% under the old, is 15 under the new. You can see. practically all the bands have lower, taxable band rates than previously, apart from the very high net worth individuals. So how do you operationalize this tax computation? To do the tax computation, you start with the gross income. So remember, it is wrong for you to say they are exempting 800,000 naira per annum salary. That's not what we are exempting. What is being exempted is 800,000. It's not even exempted. It's just taxed at 0%. It's 800,000 taxable income. How do you arrive at taxable income? You start with gross income. If there is benefit in kind like accommodation, you add the benefits. Then you apply the statutory deductions, pension contribution, National Health Insurance Scheme, National Housing Fund, mortgage interest for owner-occupied property, life insurance on your own life and that of your spouse are statutory deductions. You take them out. Then if you paid rent, 20% of the actual rent you paid up to 500,000 naira, you also deduct it. And then that balance you have is now called your taxable income. Then you take the first 800,000 naira at 0%, and then you move up the tax table like that progressively. When you are done, you take your entire tax payable as a percentage of your gross salary. That becomes what we call your effective tax rate. So even the highest income earners, if you earn 1 billion naira a month, that is certainly 0.001% of the world. Anywhere you are in the world, you are a super rich person. If you earn 1 billion naira in a month under this new tax law, you can actually pay less than 25% because you'll be entitled to all those lower band at lower rates. You would also be entitled to, even if the only thing you do is just voluntary pension contribution of 10%. Take out that 10%, and you find that your effective tax rate will be around 22%. Okay, we have the tax calculator. And I think we can even try it now. Let me see if I can just try that calculation now. Hopefully it doesn't mess up anything for us. So on that slide that you saw previously, there's a QR code that will take you to this link. There's also a link there that you can use. So from this link, this is a tax calculator. If I come here and I put my annual income, let's say I earn 100 million naira a month. So that's 1.2 billion. So I earn 1.2 billion naira a year. Let's say I don't do anything, I just do pension contribution of 10%. That's 120 million. So let's calculate my tax. You see, this is my tax under the old and the new. Of course, this person will pay more because they're earning a lot. But look at the effective tax rate. It's 22% over here under the new law. In which part of the world do you pay 22% effective tax rate when you earn 1.2 billion a year? Not many countries, even in Africa. So we believe that this tax reform is very fair. Nobody wants to pay 1 naira tax more, but if we must have a country where things work, we have to exempt the low-income earners. They've been the one paying taxes for so long. And those of us who earn, a lot more than that, we just need to contribute our fair share. Also remember that one of the reasons for this reform is also to encourage formalization. That rate needs to go up so that it's not too far from the corporate tax rate, so that people are not discouraged from, incorporating their businesses. So in doing this tax computation, you will make eligible deductions under Section 30 of the NTA, including, I already mentioned all of this. For rent relief, your rent relief is 20% of your annual rent, the actual rent that you pay if you paid anyone, subject to a maximum of 500,000 naira. Okay? Now, some people said, why are they doing 500,000 naira maximum for rent? Do they not know that in Lagos and Abuja, you need 5 million, 6 million to rent a small BQ and all of that? This reform is detached from reality, is this and that. Well, if you say it that way, of course, it's popular view. and you are right in your own way. But this reform was not trying to give you deduction for your rent. This reform is trying to help the urban poor. The most vulnerable citizens in our country are the urban poor. They are more vulnerable than the rural poor because the rural poor, they hardly spend money on anything. They produce the food that they eat in the farm themselves. They don't enter transport to go anywhere. They just trek because everywhere is close. They don't have to pay rent. They may be living in a mud house, but they're not paying rent. So you find that somebody can easily earn, even 10,000 naira a month in the village and they are fine. You earn that amount in the city, you are broke. You are homeless, to be honest. So while we're designing this reform, we said, how can we further help our most vulnerable citizens who are the urban poor? The urban poor will pay rent because, of course, they don't have a house. That's why they're poor. Because they're very poor, they have to pay transport because they're probably living even far from where they work. Imagine that. They have to buy food because they don't have a farm in the city. So one reflection, and one of those surveys that I showed you by one of the fintech, because they were using actual data, actually confirmed that rent is the highest expense head for the urban poor. The amount they pay in rent is more than any other thing, even more than they spend on food and transport. So we wanted to help these vulnerable people to say, rent is a very good way of determining the urban poor. And they're not the people paying 10 million naira in rent. So let's give them this relief up to 500,000 naira. So that if you are an urban poor working for the same company, and your friend is rural poor working for the same company, the same qualification, the same level, you that you are in the city, you pay less tax because it will reflect in your rent. So this is the primary purpose of this provision in the law. It's not to help somebody pay rent in Ikoyi, Victoria Island, or Maitama. The second aspect of it is that this is also help to get, to help the system get some credible data. By telling the taxman the tax you pay and providing relevant information like the property address, like the landlord, and the amount you pay is creating reliable ecosystem data that can be used for fiscal and economic planning. In a way as well, if the landlord is not declaring that they're earning the rental income, the intelligence will then throw it out. So these are some of the things they do in many countries to make the system work. Another thing to pay attention to is accommodation benefits. Under the new tax law, there's clear rule before we'll be looking for rateable value and everybody is confused. The new tax law has addressed that. If your employer paid cash rent on your behalf, then that amount of rent is part of your taxable income. For example, your employer paid your rent 2 million naira. That 2 million naira is taxable income in your hand because they could have given it to you to go and pay the rent. If your employer is the one that owns the property, then 5% of the cost of the property, or if the cost is not known, the market value is the benefit in your hand. In any case, all these rental benefits, paid in cash or in kind, is capped at 20% of your gross income before that benefit in kind. So if your gross income is 10 million a year before benefit in kind, any amount of benefit in kind for accommodation that we want to place on you under this law is capped at 2 million naira, which is 20% of your gross salary before the BIK. So this is even to tell you that even the high income earners, this law is also looking out for them so they are not overtaxed. Then there are other changes for, this was introduced because of the COVID and then some other issues with, this wasn't really COVID. I think it was just the, subsidy removal because COVID was 2020, 2021. This was 2023 to 2025. It was focusing on the subsidy removal and naira harmonization, which created this shock for low-income earners in particular. So the provision is that take any 2 calendar years. You can take calendar year 2023, calendar year 2024, or calendar year 2025, but any two, not all the three. And for those 2 years, if you had given wage awards to your low-income staff, or you have increased their salaries, or you have given them transport allowance or transport subsidy, you are entitled to an extra 50%. So let's say the amount you pay the person is, the person was earning 60,000 naira. You give them an additional 20,000 naira. So the 80,000 naira is deductible for tax by default, okay? But that extra 20,000 that you paid them, 50% of it is also deductible for tax. So you get an uplift in the amount you can deduct for tax, provided that these employees are not any more than 100,000, because it was not targeted at employees who earn more money than that. The other one is if you hired more people in this period that we are talking about than you will normally hire, the salary that you pay those people, 50% of it is an extra tax deduction as well. For this purpose, net employment has to increase, and your net employment is the total number of persons employed less the total number of persons disengaged during the calendar year, whether they disengage voluntarily or not, because we don't want people, although it's now in the past, we don't want people that we're going to hire people and fire the people they have just to claim the tax incentive. Even though these periods are now in the past, you are eligible to do the calculation, and any benefit that you're entitled to, you can now claim them in your returns for 2026 going forward. So these are examples of tax computations. One of the reasons why we're having this session today is that we know that even many payroll managers and accountants are still confused as to how to do the tax calculation. It is normal anywhere in the world where there are changes. It takes time for people to learn. So there's nothing wrong in trying to learn, but there's everything wrong in either pretending that you know and making mistakes, or just saying it's too complex and you don't want to learn. Because the reality is that this tax reform law are easier and less complex than what we have previously. So if you were able to do the old tax law, this one would be a piece of cake for you. So on this slide is just some samples of income that you earn and the taxes you pay under the old tax law versus the new tax law, to demonstrate to you again that even someone who is earning, 1.5 million naira a month, that's 18 million, line 8, is paying less tax under this new reform. So if you don't have the capacity to develop your own templates or to buy a software that is compliant, you can use the tax calculator on the fiscal reform website. So again, the QR code is here and the link is beneath it. So recently, in the past few days, there has been a lot of debate around power of substitution because the LRS, Lagos State Internal Revenue Service, issued some circulars to guide taxpayers. And a number of people, which I think deliberately, decided to blow this out of proportion, like it's something from nowhere. I would admit that there are people who thought it's problematic because they did not know it was always there in the law. So for them, it's new. But the reality is that this is not even new at all. It's been there since sliced bread, before some of us were born. There has always been the power of substitution in the tax law. It's also not new to Nigeria. It's common across the world. Some countries will call it the garnishment order. Some countries will call it third-party agents. But what does it really mean? It means that you're supposed to do self-assessments, you did not do it. The taxman writes to you, you haven't filed your returns, or we have this intelligence about you. You just bought a new car, you built a new house, we see this money in your bank account, you traveled abroad, but it's not showing in your tax return. Can you explain? You refuse to explain, or you explain and your explanation is not making a lot of sense. They say, okay, based on what we have about you, we think you're owing 5 million naira. you have 30 days to object. When you object, the taxman must look at your objection. He says, oh, I revised it. It's not 5 million, it's 3 million. You are free to keep objecting until the taxman says, I refuse to amend, and sends you a notice of refusal to amend. At that point, it triggers an appeal. You have 30 days to appeal to the tax appeal tribunal. You don't like the outcome, you can appeal to the high court, federal and states. You don't like the outcome, you can go to the Court of Appeal, and in some cases, you can go to the Supreme Court before they determine the amount of tax you are owing. That's why we call it when it has become final and conclusive and payable. Then even after that, even after the court has determined that you are owing, let's say, 2.5 million, the taxman is required to now tell you to pay within a specified period of time, 10 days, 21 days, 30 days. When you now fail to pay after that, the taxman has the power to ask anyone who has any money belonging to you or that will belong to you to pay the money to the government, including your bank. So I think it's just people being mischievous or being dishonest when they now say this means they will just debit your bank account. The money you want to use to pay your rent, they will just debit it. The money you want to use to pay school fees, it will just disappear. How is that supposed to work? There's no way this will be done without your knowledge. It may not require your consent, but it requires your knowledge because they've been writing to you. You are aware. You are aware that this is, what is going on. So this is how it works. Like I said, it has always been in the law. It was Section 50 of the Personal Income Tax of the repeal law. It's also in the FRS Establishment Act that has also been repealed. If they haven't abused it before, why do we think they want to abuse it now? There was an instance when the FRS, a few years back, was using it to make people show up. They write to banks and say, don't allow them to post debit. They say post no debit. They couldn't even take the money because there was no law that empowers them to take the money. So they couldn't take the money. It was just nuisance value of saying post no debit. And then bank will now say, go and talk to FRS. Even that was wrong because they were not supposed to freeze anybody's accounts. They're not given the power to freeze accounts. They're supposed to follow this process. So under this new tax law, we have even better safeguards to make sure that nobody abuses this power, including your ability now to escalate to the tax ombuds, which we didn't have before. So in terms of filing returns, you need to file annual returns as employers for your employees. Many of you must have done that already. If you haven't, you have just a couple of days left to file those returns, including projections of how much you will pay your staff. Then individuals must file their self-assessment. This is one area where we have been non-compliant in Nigeria. So in many states, more than 90%. What is even 90%? Even the most sophisticated states cannot boast of 5% filing returns. Many people just assume that if they are an employee and the employer has deducted PAYE, they don't have to do anything. That is wrong. Both under the old and these new tax laws, you must still file your returns. So I'm sure the tax authorities, Joint Revenue Board, various state internal revenue services are working on how to make this process simpler and easier. All of us must file our returns, including those that are earning, low income. You must file returns by 31st of March of the year in respect of the previous, fiscal year. Under the new tax law, if you operate a business as an enterprise and you enjoy certain incentives, you have the obligation to disclose those incentives. There's a disclosure requirement for tax incentive that is not available to everybody as a general rule for taxpayers to disclose them when filing their tax returns or shortly after. So these reforms will benefit all of us. This is why sometimes, it's painful to see people trying to create fear and panic for something that is meant to help all of us and make our country better. We have no other place we can truly call home. And we can't fix our country just by complaining. We have to do things like fixing what is wrong with policies. And this is actually at the heart of this, whole fixing what is wrong with our economy. So if we make this work, we'll have a country we can all be proud of. So it's a collective responsibility. These reforms would help small businesses in particular. It will help large businesses. It will help multinationals, foreign investors. Everybody benefits. Household will benefit. Apart from lower tax on their income, which will increase their disposable income, this reform is also removing VAT on basic consumption, food, basic food. Don't go to a five-star hotel and buy, lunch at 300,000 and be complaining about tax. That's not what they're exempting from tax. Education, regardless of class, there's no VAT on it, it's zero rated. Same thing for health. So that benefits all of us. So what would then happen from this January is that you see increase in disposable income and you see a decrease in the cost of basic consumption. Combined impact means you have quality of living and living standard is improved. You can buy more. So you're buying more business, you can sell more. As you're selling more, they can hire more people, right? Just makes life more meaningful. And many of us take for granted that, a low income earner that you just save 5,000 naira per month that we're paying before is a big deal to them. That 5,000 naira may mean nothing to you, but it means a lot to them. It means they can buy an extra, tuber of yam, for example. It could mean that now they're able to buy pencil and eraser for their kid. It means a lot. So we also have overall economic growth that will benefit the economy and government. And these reforms are also creating opportunities for all of us. There's a lot of misinformation you need to be aware of. Some of these now, people know that it was all lies because January came, we are getting to the end of it. Nobody has debited your account. But sadly, is driving some bad behaviors. We had a session yesterday with a Chamber of Commerce industry group. Somebody was saying that, but even before then, somebody had even sent me a message on WhatsApp to say they wanted to buy fruits, by the way. And they said they wanted to pay with bank transfer. And the seller said, no, if you are using bank transfer, you need to add tax money. Because the person has been told that any money that enters the account, they will take tax from it. So you're supposed to collect 5,000 and say add tax money if you are paying by transfer. And there's no tax money. There's nothing like that. But we have succeeded in confusing our people that they are now doing the wrong thing, that is now inflicting pain on all of us, rather than the relief we're supposed to get. So it's the responsibility of all of us. Let's go back and correct those misinformation. Nobody is debiting your bank accounts. Minimum wage earners will not pay tax. Don't worry about all these 70 times 12 is more than 800. That's wrong calculation. We already explained it. Gift and remittances are not taxable. But that's not to say you're now collecting. I saw a video of a lawyer who wanted to collect legal fees. He said, put narration, hospital bill, hospital bill. So, and somebody said, whenever you are paying my fees, everything is gifts, gifts, gifts. You can't use narration to avoid taxes. It won't work. Just be honest. Be honest. Honesty has to count for something, integrity. Small businesses will not suffer more. They're actually one of the biggest beneficiaries of the reform. Pension and retirement benefit is not taxed. Government is not introducing new taxes on the masses. And I've challenged people, tell us one new tax that government has introduced on the masses in this new reform law. They say you pay capital gains tax of 30% on your shares in the capital market. Wrong information. 99% are exempted, no conditions attached. Even for the very super high net worth investors, they also exempted, only that they need to reinvest, which is not too hard. Just reinvest and you're permanently exempted. It's not even a rollover for the technical people who know what that means. It's not a deferral of the tax that you need to pay, it's a complete exemption. So this makes us one of the most competitive capital markets in the world. Nigerians in diaspora will not pay tax on their foreign income, and this tax reform will not cause higher inflation, except the one we are using our misinformation to create. This reform is meant to reduce the cost and price of basic consumption and generally even what is not basic. Because if imagine the person that is producing, alcohol, you can easily say that alcohol is not basic consumption. The person manufacturing alcohol will see a reduction in their cost under this new reform law because now they can claim input VAT on all their assets. They can claim input VAT on all their services, technical fees, consulting fees that they were not entitled to before. And their corporate tax rate is coming down. So everything actually, the price of everything needs to go down. But even basic food go down even more if we just implement the tax law and stop making up, our own complications that is not anywhere in the law. This is what I call the danger of the single story, where somebody will take one aspect of the law, even when they are correct, but they speak to that one aspect in isolation of the other reforms and use that one area to create unnecessary panic. It's like the proverbial blind man and the elephant. The blind man could not see, so they touch the object they see in front of them, they feel in front of them because they can't see, and they concluded what they think it was. And the conclusion ranged from thinking it could be a rope to a tree or a wall or a fan or snake or spear because each of them touched just an aspect of the elephant without feeling the whole elephant. And so their conclusion became wrong. What's wrong? The same thing, if you focus on one aspect of the tax law and you conclude, your conclusion will be wrong. Look at it holistically. For example, I told you high net worth individuals. You can easily complain that they've increased your personal income tax is a bad law. That's the wrong conclusion. If you work in for example, the top consulting firms, if you work there as a partner, you pay more personal income tax, but suddenly your firm is claiming a lot of input VAT. Service providers never were able to claim input VAT in Nigeria, but suddenly now you can claim a lot of that. And in fact, that amount is far more than even the corporate tax rate reduction based on our simulation. So in South Africa, for 2024 fiscal year, South Africa collected over 60 trillion naira equivalent from personal income tax alone. Personal income tax alone. In that period, Nigeria could not even collect 3 trillion naira. South Africa collected more than 20 times what we collected. Interestingly, just the top 1.5% in South Africa paid more than the remaining 90, what's that? That's 98.5%. Imagine almost 99% of the population, the top 1.5% pay more than the rest of the population. This is what needs to happen in Nigeria. In Nigeria, when we did VAT, this tax amnesty in 2017, the vice president was acting as the president at the time. And what he read, which you can Google, is that 96% of personal income tax is coming from low-income earners. People earning 40K, 30K, 60K. They were the one funding and paying taxes. How do you create equity and fairness in a society where the low-income earners are the one paying the taxes? This is the major factor for inequality. And it's not right. It needs to be corrected. We recognize that these top 1%, these top 2%, they are fighting back. But just know that it's not easy to do reforms, and it's okay that they are fighting back, but don't let them recruit you if you are in the bottom 98% to fight their fight for them. Because the way it's done is to make their fight look like your fights, so you can go on the streets. Luckily, we've been able to manage, including people that are being paid. I think you even see it here. So this is what I just told you about. As at that time in 2017, only 214 persons, the whole of Nigeria, paid more than 20 million naira in income tax. How is that? This is what they should pay. These 214 should be Banana Island alone. Banana Island alone, you should have more than 214 people that pay 20 million as of that time. Right? So we just have to be honest with ourselves. We want a country that works. We want a country where everything is okay. We are easy to and quick to compare the country with other countries around the world, but we don't want to do what those other countries are doing. If South Africa has 60 trillion naira from personal income tax alone, for 60 million people. There's a lot more they can do than Nigeria with 240 million people that has 3 trillion naira from personal income tax. You can't, is daylight and darkness apart? You can't compare. I know we have concerns about corruption, but if you eliminate corruption in Nigeria 100% and you eliminate waste, it's still a poor country. So as we are addressing corruption and waste, we must also address the issue of revenue. So this is the data showing that, this one here, showing that, informal sector are paying a lot of taxes. Anywhere they turn, we ask them to pay tax. You see, women that are selling pure water just to be able to get 1,000 to feed their family. And they're asking them to pay. The tax they pay on a daily basis sometimes is more than working class that work in organized sector. Pay 50 naira here, pay 70 naira there. Before you know it, at the end of the day, they've paid 600 naira. The amount they make themselves is 1,000 naira. And we've seen people who are being paid money to go and protest against the tax reform law. This one was carried by many of the newspapers, including Guardian. I think in the process of trying to share the money, fight broke out, and some of them said, we are not doing it again. So they reported it and said the EFCC should go and carry them. 300 million was the bribe they were paid. One very significant organized private sector group, the DG, also called me and said they were having their council meeting and they saw someone was saying, let's put out a statement that we're against the tax reform. They said, how can we be against the tax reform that is here to help us? So the DG became curious and investigated and realized that this person has been paid. So he called the person and said, you have been paid. I can tell you who paid you, how much they paid you. I can even show you a copy of the receipt. He started apologizing. So the extent to which people will go is unbelievable. Some of the people that are fighting this reform are the people who benefit from the status quo that we're trying to correct. So this misinformation can be very dangerous. It can cost a lot of money. It can make people lose their livelihoods. When they started the narrative, it was on, on radio, on TV, newspaper. Some people had airspace. Nigerian capital market as at that time has gained about 50%. 50% is one of the best performing in the world. In dollar terms, it was more than 50%. There's no market that gains every day of the year. It has never happened in history. It will never happen. The day the market lost a little bit, which could be profit taking, it could be correction. Hey, they said it's capital gain tax, new tax law. They repeated it for 5 solid days. By the end of day 5, it was primetime news, channels 10 p.m., Arise, some people ran airspace and said bloodbaths. We kept saying it, and people began to believe it. By weekend, stockbrokers were calling their investors. Everybody is selling. You too, won't you come and sell? On the 11th of November, Tuesday, 2025, I call it the Black Tuesday. The market lost 4.6 trillion naira in one day. And that is the largest in more than 15 years. Because we created misinformation, we repeated it again and again, no evidence, no data. We didn't need to do that. Of course, misinformation, you don't need to prove it. People believed it, people acted on it, and real losses happened. We took the information from the market for that day. What did we see? It turns out that day, total number of deals is 20,173, valued at 23.5 billion naira, which means average transaction of people selling was just a little over 1 million naira. You are going to ask yourself, why are people selling 1 million naira, rushing to go and sell when the tax law exempts 150 million? Of course, they were not told about 150 million. That will not fit their narrative. They were just told there's a 30% tax. So that misinformation led to the market losing a lot of value. We had to put out clarification, and then luckily we managed to convince the media to say, don't help them promote their misinformation, and then the correction led to the market being able to bounce back. We ended the year with returns of over 51% in naira terms. In dollar terms, close to 60%. This year alone, the market has returned, already close to 10%. So this reform is actually something to celebrate. We should tell everybody about it. Foreign and local investors, particularly retail investors, tell them 150 million, 10 million naira gain, 150 million naira proceed. You don't pay any tax. Come to the market and invest. Let's promote our economy. If you can deepen this capital market, it will help businesses to be able to finance their growth in an affordable way. Borrowing from a bank at 30% and 35% is not easy at all. So we need the capital market to help us finance our growth. People say Tinubu and tax. We ask them to tell us the tax the president has introduced on the masses. They can't find anyone. So we can tell them this government has removed, reversed, or suspended the most taxes since Nigeria's independence, including the ones you see on this screen. 5% excise tax on airtime, and these were taxes introduced before the government. So it's not like government introduced it and also suspended it. Cybersecurity levy on money transfer, carbon tax on single-use plastics, excise tax on imported vehicle, import duty on food items, 4% import levy, which was introduced under the 2023 Act before this government. Financial Reporting Council of Nigeria charge on private companies was capped at 25 million, where some were already paying hundreds of millions. Expatriate employment levy and so on and so forth. In conclusion, these reforms are transformative. They are to help us with a fiscal reset that will move our country forward. They will benefit everyone other than tax evaders and those who are benefiting to the detriment of the rest of us. But it's more than just tax. So you need to plan for it. You need to train your people. You need to inform them. You need to think about processes. There's a lot of technology involved, including something like electronic invoicing, and several of the tax authorities are working on API for you to just push your tax returns and payments seamlessly under this new reform. So you also need to plan for how you implement diligently so you don't fall foul of the law. Because if you miss your tax payments, there'll be penalty, there'll be interest. If you go and claim what you're not supposed to claim, there'll be penalty for false claims. So what should you do? You need to understand, you need to engage with the reforms, and you need to comply. Seek understanding from credible sources. Knowledge is power. Don't run with headlines. I have come to a conclusion that 99.9% of headlines are misleading. And they write it because they want people to read. They want people to click. Even though people don't read, people just read the headline and they jump into conclusion and move on. We see it even today. I've seen headlines that are misleading as well. The danger of misinformation, be aware. You can know, at least you can guess that it is misinformation if they are trying to make you afraid, if they are trying to create panic, if they appeal to your emotion, okay? If they don't have the qualification, experience, and expertise to speak on the subject, these are red flags. You go to somebody's timeline before the tax reform, they never spoke about tax. Suddenly, after the tax reform became a hot topic, they started creating content on tax reform. Many of them is how to get the credits in their bank account at the end of the month. They know once you talk about tax reform, you get the clicks, you get the likes, you get the comments, and you are paid at the end of the month. They're just trying to earn their livelihood. Don't let them use you. Make sure that you can tell what is misinformation and what is not. Find the opportunities under the law, and there are so many of them, and then take action by playing your parts. Implement diligently and communicate with clarity. That's how to connect the dots and benefit from this reform. So thank you very much. You can find a lot of information from the fiscal reform website, social media account, WhatsApp messages, dedicated YouTube channel, even TikTok. We're not leaving anybody behind. And you would also find a lot of information from the Joint Revenue Board, NRS, and the various state internal revenue services. So this is the point where I'll stop and invite our other speakers for any comments or remarks, if they have any. And then after that, we'll spend the remaining time we have, which is about 30 minutes, to answer some of your questions, and then we call it a day. So what I'll do is I'll go in turn and ask our speakers to make comments if they have any. If they don't, they can just be silent or just say that they don't have any comment. Let me start with the Joint Revenue Board. So you have just about 2 to 3 minutes.
Okay, thank you so much, sir. It's a privilege to be on this call with your distinguished self, and I can see Prof. Albert on the call as well. My apologies, the executive secretary could not make it, so I'm asked to fill his very big shoes. So I'll just make a very brief comment that under the new personal income tax regime, compliance may no longer be measured simply by whether the relevant pay tax has been deducted, seeing that we're talking to HR people from across the country. So the law now examines the entire payroll and compensation process, how employment income is classified, how allowances and benefits are structured, how records are maintained, and how consistently payroll data align with statutory filings. So the practical implication is that existing practices, long-term practices, traditional practices, internal policies, or the various interpretations that these organizations may have that are not firmly grounded in the law may no longer offer protection. So where remuneration items are wrongly characterized or where payroll records cannot clearly support the tax treatment applied, liability will ultimately rest with the employer and maybe internally with the officers responsible for those decisions. So our guiding principles should be straightforward, such that any elements of employee compensation that cannot be clearly justified under the law as non-taxable should be treated as taxable until the contrary is established. We just want to round up with this final note. The new tax framework for individuals is intentional, while having at its core the overall welfare and well-being of the individual taxpayer, especially those at the lower income and middle income bracket. It is also rule-based and enforcement-oriented, and organizations that realign their payroll practices early will manage the risk better than those who defer. And we hope that with fora such as this, all the employers of labor and the payroll managers and the HR people will be better prepared and equipped to deal with the changes that come with the new tax laws. Thank you very much for the opportunity, sir. My sincere appreciation.
Thank you very much, my brother, for that. That's very useful. And like we said, the Joint Revenue Board is at the center of these reforms, and they're helping us with coordination, collaboration, ensuring that there's consistency, which we haven't had in the past. So do visit their websites. If you want to find out your tax ID, you can go to GRB website. All that you need is your NIN, and you can pull out your tax ID, even if you haven't registered before. So the new tax law empowers the tax authority to register you. Old tax law says you must be one to apply for registration. So it's a shift. The new one registers you once they think you are a taxable person. So we have that. So thank you very much. So next, I'm going to invite, I can't see any of our State Internal Revenue Service, so I will invite Mr. Albert Folonshaw. Please go ahead, sir, for your remarks and comments.
Okay. Thank you very much, Chairman. Participants, it's been interesting going through the questions that have been posted by the attendees, and I've tried to answer some of the questions as quickly as possible. A lot of those questions are also generic. A lot of people are concerned as to why people are incorporating or converting their limited liability companies to, their enterprises to company, just to take advantage of the fact that the 100 million exemption has not been specifically stated as being applicable to enterprises, which is a genuine concern. But the response I have included is the fact that enterprises are not taxed like companies. They are taxable like in the name of the owner of the enterprise. And therefore, it is purely a state issue. And each state are already working on harmonizing their processes with that of the law that was passed by the National Assembly. And we believe that on the basis of that harmonization, they're also coming up with their own threshold of what is exempted in terms of individual and how much is the threshold for the exemption. And at the end of the day, whatever it is always going to be lower than being subjected to tax under corporate. If you now go beyond the exemption threshold, you'll be exposed to corporate tax at 30%. Hopefully, it will be 25%. And of course, the development levy of 4%. But for enterprise, as an individual, your tax liability will not be more than depending on your income threshold, it is still the first 800 at 0%. All right, because a lot of questions were also asked on how this table works. Okay, a question that was asked by someone was that if I earn 900, does it mean that I'm fully liable to tax on the 900? The answer is no. The first 800, after taking all of your relief out, the first 800 will still be at 0%, and it is only the balance 100,000 that will be taxed at 15%. So in all, you'll be paying only 15,000, which is 15% of the 100,000. By and large, I think it's very clear, which is people are already receiving their salary for January, and if you have a threshold of income, taxable income that is less than 20 million, you will have observed a reduction in your previous tax. And if you earn more than 20 million a year, you will observe a minimal increase. And so that is the message that I believe we should take across. And a lot of people are even posting their payslip in some places. And some people are even getting angry that why are you posting? That's not the issue. Okay, so I believe the message to go around, the reform has come to stay, and it is more benefit for the generality of Nigerian than the message that have been sent across. So, but of course, we'll try as much as possible to respond to all the questions, even those that cannot be answered now. I'm sure we'll find a way to answer them and make them available online. Thank you.
Thank you very much, sir. That's very useful. I like the comment around those who say I run my own business and then what happens to me. So the 100 million naira threshold applies to all businesses for the purpose of VAT and withholding tax, but of course only to companies with respect to corporate income tax, which means as an enterprise, you pay personal income tax on your profit. One of the misinformation we saw was people say, oh, vulcanizer, when they pay you only just, 1,000 here and there, once it's more than 800,000 naira, you pay tax on it. That's wrong because the amount you pay the vulcanizer or the tailor, the makeup artist, is not their net income. That's the amount on which they have to deduct all the expenses, the cost of buying the fabric, the cost of sewing it, of paying their worker, of paying rent, of paying rates. You take out all those things. That is why in the presumptive tax regime for informal sector that the Joint Revenue Board had worked on along with our committee, the proposal there is that if you are running your own small business and you make like 12 million naira a year, you should be exempted from tax because that 12 million is not your money. It's the money, gross income, like we call it in accounting, where you have to cover so many costs. So once that is, gazetted, People will say what we're even planning to do is how can we even do tax exemption sticker for these people so they can even just bridge. You are roasting corn by the roadside. You can't pay tax. All those nuisance taxes, the way we've been taxing our poorest and most vulnerable people can't continue. It's just not fair to have a society where we place so much burden on these poor people. As those people are seeing their net pay going up, some people are angry that they are seeing that their pay has gone up. I don't know what they want them to say. To say it hasn't gone up. And some have turned it to, do you know how they will spend it? The money will be stolen. That's mixing issues up. The fact is, this is there to help the majority of our people. So we'll try and take some of the questions now. Uh, if there's any we haven't addressed, there are quite a lot of questions. And Mr. Albert Folonshaw would also join me and my brother from GRB if they want to take any of them. Let me try and take a few. Toluwa She Ojo says any relief for public servants, so we don't discriminate. So public servants, private sector, everybody has relief. It's not particular, apart from the military, for very obvious reasons. So the military are completely exempted from tax because we need to encourage and motivate them a little bit more. How do we determine the rent relief where the basic is already consolidated? This is a very good question. This rent relief, you don't need to have an item in your salary that says rent. You don't need to have it at all. Just leave your salary the way it is. All that you need is, did you pay rent? If you paid rent, how much is it? Take 20%, no more than 500,000 relief is available to you. So don't go and start restructuring your payroll to describe something as rent allowance just because of this. It is not necessary. Okay, that's a very good question that this person asked. Is NHIS deductible? Answer is yes. There's no rate. You just deduct the NHIS. If you contribute 10,000, deduct the 10,000. So you don't need to apply a rate to it. Anonymous attendee, temporary staff. They have been deducting withholding tax on them at 5%. What should be the correct position? A lot of people do this. I don't know how whoever introduced it to the Nigerian system, the person has created a lot of confusion in this country. So because even under the old law, you can't be deducting withholding tax on a contract staff. There's a difference between a contractor. That's somebody who is working independently. So let's say I'm a photographer. I have my own equipment. I do my stuff. Whenever you want to do photography, you call me. I cover your event. I charge you. I move on to the next customer. If you are paying me, you can deduct withholding tax. But if you employ me as a photographer, I resume in the money. You're the one that bought the camera for me. I'm your staff. There's no withholding tax. So you have people working for you in the factory and you're doing withholding tax. For what? They're your staff. The fact that you don't give them permanent employment does not change that fact. So anybody that is doing withholding tax on contract staff needs to stop. What you need to do is to calculate how much you are paying them in a year. Look into, Mr. Albert already said that if you are earning 900, even if you are earning 900,000 naira a year, you may find out that you're paying zero tax by the time you take out NHF, pension contribution, and all of those things. But whatever it is that you are paying them in a year, find where they fall. If they are exempted, don't collect tax from them. If their tax is 1%, do the 1%. Do the right thing. Mr. Alba, you wanted to add something to it?
Yes, there was a question around I work in a place and I'm also being paid commission. That should withholding tax apply on the commission? And so the answer is, if you are already a worker, then the commission is just another line of income for you. Withholding tax should not apply. It should be added to your other income. But if you are not an employee of that organization, withholding tax can come up. Because it's similar
And that is absolutely correct. Yes, I agree. So if you work for a company, anything they pay you, it doesn't matter what name they call it, it's part of your compensation. So don't bother. Tax planning will not work like that, calling things commission. It's okay. I'm not saying people are using it to avoid tax. Some companies, that's just what they call it because they want to encourage you to do. It's very common with marketing staff. You are the business development staff. If you bring contracts, they give you a percentage of it, but all of that is part of your salary. And someone said honorarium. So if you call what you are paying the person honorarium and they're your staff, it's part of their compensation. If you are not a staff and they pay you honorarium, then you need to declare that honorarium yourself. It's not for the person paying you to deduct withholding tax. It is you to declare it as an income in your annual tax returns and pay tax on it. Someone like me, I do public speaking a lot, and sometimes they will give me honorarium. It's taxable, and I've always declared it for tax even before this new tax law. So you declare it and you pay tax on it. Another question I see here says, what is the minimum acceptable documentation required for this rent relief? Good question. So people have been saying, what should they provide for us to give them the rent relief? The Joint Revenue Board, we issue the guidelines, but in the meantime, because you don't have to do it this month, right? So you still have ample time before you grant that relief to your staff, so they are not losing anything. But if you're in a hurry to do it, some of the recommendation is that the staff needs to show you that they pay the rent. So anything you consider sufficient, which could be transfer, they do bank transfer, they give you a copy. It could be a receipt they got from the landlord. It could also be the rent agreement. But rent agreement is bulky, so I would suggest something that is easy for you to manage. You can also make it very easy. If I have a company that I run and I'm the payroll manager, I'll just create something like a Google form. Under the Google form is everybody, staff, go and fill it. The address of your property, the rent you pay, the name of your landlord, how much you paid in rent, and there on your own, you attach the receipts. I don't need to touch anything. Every staff will do it for themselves. You leave it there in your record. The day the taxman comes and they're looking for evidence, if they call your name and say, give us the evidence for Taiwo, you go and pull it out. If Taiwo lied, Taiwo will face the consequence. In that form, you can put a caveat there that says, the declaration you are submitting here is true and is correct. If anything is wrong later and we get assessment from tax authority, including penalty and interest, you will pay it. Let everybody sign that, because some people want to game the system. They will go and make fake receipts. Bear in mind that anything that you say you pay in rent, the taxman is trying to calculate it as income in the hand of the landlord. So don't go and lie. So my simple answer to that question is, do whatever you think is practicable for you and easy to manage, pending when the guideline will be out. When the system is fully built and fully developed, this will be as simple as just giving the name of your landlord and their phone number. That's all. Something like that, just as simple as the phone number and the name of your landlord is sufficient, because the system will then use the phone number to authenticate that the name is correct. With the phone number, it can link to NIN, NIN links to your tax ID, and everything goes to the system. Like in the US, they have these 1099 forms. If you are paying someone like a freelancer who is not a staff, you disclose it. You are paying rent, you disclose it. You pay somebody dividend interest, you disclose it. As you are disclosing it to get your deduction, the tax authority is picking that data. When that person files returns, if they don't disclose the honorarium, but the person who paid them has disclosed it, they will pick it and say you have lied. So this is how they make system work, not chasing everybody to try and do audits every now and then. That is creating more problem than solution. Simon from FCTRS said, register for new thing on the new platform. Please, our concern is, what would the status of the previous one? Okay, so we're asking people to register or just retrieve. You have been registered already. If you have NIN, you already have a tax ID, so retrieve, not to register. We're asking people to retrieve their numbers. This person from FCTRS saying, what happens to the one we have before? Let me tell you what will happen. It's a transition process. Many of us remember the days that we used to have bank account numbers that were upside down. Some banks, 8 digits, some banks, 11 digits. When CBN came with BVN, every bank had to align. So today, the number of digits for all the banks in Nigeria for bank accounts is exactly the same. Even the fintech that use your mobile number as your bank account, you see that they drop the zero so that it can be 10. So there's consistency. Suddenly I still have my old account number because I'm an accountant, so I keep a lot of records. I still have my old bank numbers. But for my bank account that I use frequently, I still remember the number, you know. But we've migrated. So this is exactly what we're doing with the tax system. So the new tax ID is where we are migrating to. In the meantime, you will use both your old number and the new number. My wife has a small business and she was doing the tax returns for her staff just a few days ago. And in trying to submit the returns, I saw for Lagos State, they already included a column for GRB number. That wasn't there before. So there was the LRS number, there's the GRB number. You can see Lagos State is already integrating. So that's what would also happen, across the country. And hopefully in the next 1 year or maybe 2 years max, we'll get rid of these old numbers and everybody will just have one number that works for them everywhere and for everything that they do. James says, for the purpose of taxing category, does a business name fall under personal? Okay, Mr. Albert has answered that. Could you kindly provide more explanation on the graduated income tax rate on individuals? It's very, very confusing. Why do you have to put very twice? It's not very, very confusing. What we have said that this one is easier than what we had before.
I've already
But we
answered
also know
that.
that. Oh, you already answered it. God bless you, sir. Which one should I even take? So, yes, Oluwole Adepoju says, are we still paying for road taxes for the year 2026? So those taxes we pay to local governments and to state government and to government agencies are still in place until the process is complete. The process is that there is a harmonization tax law that states are enacting for themselves to stop, these taxes. So you can't just say you are not paying now because that would be against the law. If they come to you today and say pay radio license and TV license, and the state has not enacted a law to repeal it, you still have to pay. So the answer is yes, until that state has repealed it. The tax law was able to harmonize and get rid of a number of taxes, but not all of them, because the Supreme Court said that we cannot dictate for states and local government what taxes they can collect. So we did two things. One, to then draft, along with the Joint Revenue Board, a draft law for states to enact for themselves to get rid of these nuisance taxes. Number two, we wrote to the National Assembly for the lawmakers to kindly amend the Constitution to remove those nuisance taxes. That process is ongoing and it's progressing well. So we are grateful to the lawmakers for progressing the amendment to the Constitution. We are grateful to the governors for passing, along with their houses of assembly, the harmonized law. Once this process is completed, we will feel the relief like it will be visible, because that means, you can't collect taxes in cash. You can't put roadblocks and spikes with nails to try and collect taxes. You can't harass people and all of these things. It won't happen magically overnight. This is a system that people have gotten used to for decades. There are people who make literally hundreds of millions of naira from this. They won't give up easily. But once you have the legal framework, it's a good starting point. The next stage is how you implement it and enforce compliance, including consequence management for the people who may not want to comply. I can see Dr. Zaid from, that's the executive chair of Kano Internal Revenue Service. I'll just ask him to make some comments. He also has a lot of experience in how these formalization of taxes, don't pay in cash, how it has worked, because he led the reform in Kaduna. So Dr. Zaid, please go ahead.
Thank you, Mr. Chairman. Well, I just got to the meeting at the point when you are discussing about the roadblock, the burden of roadblock, and the criminalization of cash collection. So what most of the states have been doing so far is to put in their laws, the domestication we are doing, criminalization of cash collection. In the past, it wasn't in the domesticated law or in any laws of the state IRS. But what we are currently doing to make it more effective is to put certain provisions in different laws that we have across the states to criminalize any cash collection. That way, we believe we are combating revenue leakages. The systemic leakages we have in the system will be a thing of the past, so that going forward, all taxpayers will be interacting with the e-channels that the IRS make available. And if need be, they can visit the banking halls to effect payment. That is one of the things we are doing. And we also need to thank the Presidential Committee for emphasizing on this banning of roadblock. It has been an issue for most taxpayers, especially the traders on the Nigerian routes, moving goods either from the northern part to the southern or from the southern part to the northern part, whereby most of these motorists pay more than 20 to 25 levy along the Nigerian routes. So now with the new law, it is also penalizing state authorities that are encouraging or abating some of this erection of roadblocks. I think to the tune of about 5 million naira for any revenue authority that's supporting some of these things. So a lot of formalization is going on. The section 29 that possibly you have mentioned in your presentation about presumptive tax, there is now new regime on how to go about that. There isn't going to be arbitrariness going forward. There are rates that are applicable across all the federation that will not give room for arbitrage between one state or the other. So if you permit me, these are some of the things that I've had you talk about. Maybe this, by the time the discussion progresses, I will come back to add more to the discussion. Thank you, Mr. Chairman.
Yes. You've added a lot, even with your comments. I didn't even know you just joined. I was glad to see you. Thank you for sharing your experience, because the reason why Dr. Zaid's experience is very useful is because he has done it before. People will say to you, oh, they don't have access to this, they cannot pay. They did it. So if they can do it, all of us can do it, because if we don't kill the source of this incentive for that behavior, it will not go away. So this is what we're hoping will happen across all the states of the Federation. I'll just answer one question. Then I'll ask if any of our speakers want any final comment, and we close the meeting. We'll try and do frequently asked questions from your questions. We'll develop them into questions with answers, and we share that. So you will not find any question that will go unanswered, but you need to understand that we can't continue the call for a longer time. It's already 2 hours. So someone said, can we talk about self-assessment? That if somebody is only earning employment income, do they need to file self-assessment return? The answer is yes. We have not been doing it before, but we must start to do it now. The whole idea is that return will be very easy, because a lot of your information should be pre-populated, very soon. As your employer is remitting your PAY, you see it there. Even your contribution to pension. In fact, this would also help many of us. There are some employers, they will deduct your tax, they will not remit. They will deduct your pension, they will not remit, and you don't have a way of finding out. Filing your returns have a lot of benefit. It does not mean you need to pay additional tax. If you only earn employment income and they have deducted your PAY correctly, it's just for you to go and click and submit, put your address and validate. Maybe less than 5 minutes, you are done. And if your tax has been over deducted, you get your refund or credit. Okay. But if you have other income, you are a salary worker, but you also have small apartment that you rent out to collect rent, you must include it when you're filing your return. You have one side hustle, include it. So this is how it's meant to work going forward. So thank you all for joining today. We had, like I said, over 13,000 people registered. Because of that, we had to increase the capacity of our Zoom meeting from 1,000 to 3,000, and that 3,000 was at capacity just 2 minutes into the meeting. So this is a demonstration of the interest in this topic. I can see the Ogun EC is here. Sir, please go ahead and make your remarks before we close.
Thank you very much, my chairman. And I think I've been on the call right from the onset. I think I was going through the question and answers in the chat room as well in terms of what has been contributed. And I know we don't have much time. I think most of the issues have been handled. And I'm happy that you've also mentioned the fact that some of those other things that will affect the other areas of the subnationals that may probably have impact on the local governments and the informal sector are things that are being discussed already in terms of some aspects of constitutional review. The additional part of it is the fact that we had about 3 or 4 hours GRB board meeting again today to look at those areas of the taxes and levies and approvals for collection. And a lot of collaboration and discussions are ongoing with the subnational local government chairmen and other MDAs. So I believe when all these things have been put in place, the benefits of people really understanding the fact that the law is supposed to really help to bring more income, more disposable income, particularly to the low-income earners. I mean, they will better start seeing the benefits accruing from the new law. And also for businesses as well, a lot of productive base that will come up in terms of minimum tax. When you're talking of companies that are in agriculture, being tax exempt for 5 years, that's like a pioneer status. Companies that are earning a turnover less than 100 million. These are areas to really kickstart the economy, and everybody should be really set for an improved economy coming forward. So I think it's been a great presentation. Well done.
Thank you very much, sir, for those comments and remarks. We're also happy to hear that the GRB is meeting. So we like the energy we are seeing from our executive chairmen across Nigeria. So thank you for supporting the reform and driving it forward, as well as the GRB platform. We'll continue to work together for the interest of this reform and for the interest of our country. Thank you to all the speakers who joined us. Thank you for your remarks. Thank you to the participants, and thank you to the Secretariat for collating the questions, organizing the calls, and making sure that everything runs smoothly. This is where we'll end the call for today. Please look out for more information. Enjoy the rest of the evening and be good. God bless you all. Bye-bye.